and this is being live streamed. So we have Anil Garu on the video. So
Keshav, can you unmute me?
Yeah.
I will log out from your mobile.
You're on.
Yeah, make Anil Garu's profile as a co-host, Keshav.
Yeah. Yeah, it's all set. So Madhu, all is set for a live. So hope it is alive.
Yeah, it's all good. Let's get started.
Okay. So yeah. So I see people still joining. Just a minute, one more minute. Okay, I think yeah, I still see people joining here. Okay, let's start our session for today. So, hi everyone. Welcome to the session on tax saving strategies for real estate investors. And this has been organized by Telangana American Telugu Association, also known as TTA. We are hosting this program from our Seattle chapter, and I am Keshav Reddy from TTA Seattle team. And I have my co-host Manohar Garu with me on the call today. And before we begin, I will take a few minutes to talk about who we are and what we do. TTA, Telangana American Telugu Association, is a socio-cultural non-profit organization founded by Dr. Pailamalla Reddy Garu with his mission to promote, preserve our culture and also give something back to the community where we live in. We have our advisory council who steer the organization to the mission. It is headed by our president Vamshi Reddy Garu, who had been working relentlessly and supporting all the TTA chapters across the US and India to conduct various events and services for this community. And we have been able to do this community service with the tremendous support from the members. And you can be part of this great cause by taking a membership. And Manohar, you can share the details over the chat for taking the TTA membership. And today, I know you are waiting for Anil Garu's session. And yes, I would like to invite our speaker today, Mr. Anil Garu. There is an echo. Somebody. Okay. Thank you. So I would like to invite Anil Garu. And Anil Gandhi Garu is a leading tax practitioner in US. And he has been recognized one of the top 20 dynamic CEOs of 2022 by the CEO publication USA. And that's a digital media platform created by the American CEOs. And he has been a professional and a privileged member of the Forbes Finance Council. And and in his distinguished career in the field of finance, he has stints with PwC, Sun Edison, Amazon, and Starbucks before he floated AG FinTax in Seattle. And as you know, his webinars on taxation and finance planning are keenly awaited events by thousands of entrepreneurs, businessmen, and professionals across the US. And we are glad that Anil is here today. So before we begin the session, I would like to hear a few words from Vamshi Garu here. So Vamshi Garu.
Hey, Keshav, thank you very much. Thanks everyone for joining the session. Anil, thank you for hosting this, coming and being a speaker for today. I really appreciate your continuous support to TTA and to the community. And I would like to thank my TTA Seattle team. Keshav doing awesome job. Manohar, thank you, and Madhu, thank you very much. I just don't want to take more time, but let's give the community the advice. Thank you, Anil. Thank you, Keshav.
Okay. Thanks, Vamshi Garu. Thanks for having few words. Okay. And Anil Garu, so you may please begin the session now.
Thank you. Thank you very much, Keshav. And thanks to TTA for this opportunity to share my knowledge with my extended community members. And TTA has been doing a lot of great initiatives. And thanks to the great leadership, and congratulations, Vamshi, as you are doing great. And as a president, we all are proud of you, and you are doing extraordinary. And thank you. And let's on the weekend, everyone joined on this call on a weekend. So definitely I will try to bring some value on how we can do. 1 second, let me change my background. Just one second. Yeah. So today I'm going to talk about how we can do some tax planning strategy implementations for real estate investors. So we all have been making earning more than what we required on day-to-day life. Like example, we may require $10,000 per month, but we may be making $15,000. What we do with all the extra money, whatever we are earning? We always invest either in the real estate or in the stock market. So in the recent times, you have been seeing what is happening with the stock market. Of course, there is a downturn in the real estate also. So, but I do with my knowledge, because I am in the finance industry, I have been noticing it. Even a lot of investors lost, many investors lost hundreds of thousands of dollars to millions of dollars in the stock market. And because many companies even filed bankruptcy. Even recently, many people invested in the cryptocurrency, and many companies filed bankruptcy in the cryptocurrency. So all of a sudden, the money got disappeared. But real estate is not like that. So I am not a real estate agent. I'm not trying to sell any real estate properties to you guys here. I'm only trying to share my knowledge, what I attained after talking with some hundreds and thousands of people who has been investing in the real estate, and also with my own research, my personal research on the real estate investments. So, but real estate works in a different way. So even there may be a downturn in the market, but it will definitely bounce back, and you have a real physical asset all the time. And this is a legacy asset. Even something happens to you, the asset passes on to the next generation. Even you are having a successful business, there is no guarantee that what is going to happen after your dismissal. But real estate is a physical asset. So there are a lot of great ways how you can build wealth in the real estate. So real estate is one of my favorite topics, because I do a lot of research all the time on how people are so successful, how millionaires are becoming millionaires or billionaires. If you look into the top-notch billionaires, there are more than 50 billionaires became billionaires only because of the real estate investments. So there are a lot of ways. I'm not saying that, if you're not a billionaire, I'm not saying that only billionaires should listen to my webinar. I'm saying that if you want to build wealth, real estate is one of the greatest tool to save taxes and also to build wealth. So let's get into the topic now. I'm sharing my screen. And real estate is a complex and sorry, we should put everyone on mute. Okay. So real estate, there is a lot to learn from the real estate investments, considering from the tax and finance perspective. And today I'm going to talk about some basics, or some which are very generic for a lot of people. And maybe in the near time future, maybe in 1 month or 2 months, we should have one more webinar talking about tax saving strategies for real estate investors advanced level. So right now I'm trying to cover at the basic level. So whoever follows this, it will be very helpful for them to attend even the next one advanced level also. So before you go and talking, before you going to spend for the next 45 minutes to 1 hour with me, you should know with whom you are talking, with whom you are following following now. So it's me, Anil Grandi. I am the CEO and founder for AZ Fintechs. I am based out of headquartered at Seattle, but we have operations in more than 30 states now, and we have clients in more than 30 states. And I work for Amazon, Starbucks, PricewaterhouseCoopers, and Sun Edison in core finance field for the last 19 plus years. And we are a team of 40 plus members, 50, actually right now we are 50 plus members with a lot of CPAs, chartered accountants, and other finance professionals. And we are experts on the tax planning, and we are a tax planning and CFO services. And we do also file tax returns for the business and also individuals. And last year I was awarded as a top 20 CEOs of America, and I am also the Forbes. I have been serving as a Forbes Finance Council member for the last couple of years. And to know more about me, just Google search Anil Grandi. You will find hundreds of pages to thousands of pages about my acknowledgements, my articles, and other media acknowledgements. Let's get into our topic today. This is a very basic thing which I tell to my clients, my friends, and also to my family members all the time. Buy one real estate property every year. It doesn't matter what level of income you are. You may be at lower income level, you may be at higher income level. If you are in America for the last 10 years, it means you should have 10 properties right by now. If not, you are running late or you are running back in the race. There are so many advantages with the real estate. Real estate, as I was saying earlier, real estate could be one of the greatest asset to have in your investment portfolio. Don't put all your money only in stock market or maybe in the bank account. Rather, start investing, diversify your investments. And whether what is a recession, you may having a lot of questions about the recession, which I have a couple of slides in the next slide in my presentation in the next slides. But right now, I want to focus about real estate. What are the major advantages of having investments in the real estate? So I am summarizing all advantages into this one snapshot. Number one, cash flow. It is like a passive cash flow. It is like a machine which is generating passive cash flow every month for you, whether you are working, not working, sleeping, or you are on a vacation, whether whatever you do, it's a passive income. It doesn't matter. You don't have to work for your money every month or every day. Once you start investing, on average, you should whenever you're investing in the real estate, you should always focus one of your parameters should be, am I generating cash flow from this real estate or not? Like example, if you are buying a residential property or you are buying a commercial property, every month, whatever rental income you are getting, after taking care of your monthly EMIs, monthly loans, monthly maintenance, and other expenses, still you need to end up with some positive cash flow. You may say that, Anil, I don't see such properties at all. Like example, if you are based out of maybe California, New York, New Jersey, or Seattle, which are very expensive, where there is a real estate are very expensive, or very highly valued properties. What you should do? Don't think about investing only in the area where you are where you are living. You can go and invest wherever you want in America. If you are living in Washington or California, if you think that you are not getting a cash flow for your investment, then go and look for some other properties out of your states. You can invest in Midwest area, maybe in a Missouri state, maybe in a Florida state, or maybe in Kansas City. There are so many places where you can generate a positive cash flow every month on month with your real estate. Then tax benefits. As I was saying earlier, there are tremendous tax saving opportunities are there when you have real estate properties. Real estate properties is considered as a passive business. It means you can claim a lot of your expenses. You can claim your mobile expenses, internet expenses, travel expenses, vehicle expenses, which I'm going to cover in detail in the next slide. And also an asset protection. If you have investments in the stock market, the company can file a bankruptcy at any time. Market may crash. The industry, the market, the specific industry, maybe crypto industry or maybe technology industry or maybe manufacturing industry. The industry may get impacted and your valuations may go down. But real estate, it is a physical asset. You never lose your money over the long run. Yes, sometimes asset may go, valuation may go down, but you will when you look into the history of last 50, 100 years, or in the span of 5 to 10 years, again, the valuation, the real estate value will bounce back. Even as long as you are having a monthly positive cash flow, you don't need to worry whether the market value is going down or up. You just be happy with every monthly positive cash flow. Then value increases over the time. You look into any history, you can do your survey for the last 10, 20, 50 years in the previous. Always real estate appreciates over the span of 5 to 10 years. And it's a generational wealth. Even something happened to you, your next generation will continue to enjoy these assets and also a positive cash flow. And the best part of the real estate is leveraging. You don't need to invest 100% value of the property. You just need to invest 20 or 25% value of the property. The 75% of the balance, who will invest? Who will pay? Who will give to you? The lender will pay you the 75% of the value of the property. And who will repay the debt? It's not you. Your tenant is going to repay the debt for forever till you repay the complete debt. Only you are investing only 20-25%, but you are going to enjoy 100% appreciation on that property. So, and I also say that diversification. When you have a diversification of investments and when you start accumulating more properties, sometimes some people come and say that, hey Anil, I have a rental property, but it is on vacant for 2 months or 3 months. Yes, if you are ensuring whenever you are buying a property, and if you are ensuring that you have a positive cash flow on every property whenever you are buying a property, and when you start accumulating your assets, even couple of properties are not generating monthly cash flow, still you should be okay. Because overall, when you look at the portfolio of your real estate properties, even one asset is not making money in 1 or 2 months, the other asset you are generating positive cash flow from other properties. And it should be always real estate. I am not asking you to put 100% of your money in your real estate. Even you have $25,000. What we do with all the $25,000 in general? We just keep the money in our bank account. What is an interest rate in our bank account now? Less than 0.5%. Rather, this $25,000 can generate an asset. Okay, you can buy a value of we can buy a asset with a value of maybe $100,000. Even you can buy a small condo. You can rent it, and you will continue to enjoy the average appreciation. Average real estate appreciation is around 5 to 10%. Rather, leaving the money in our bank account, if you can start investing in the real estate, you can continue to build your real estate over the time. And so, Anil, what are the tax advantages I get by having a property? If you are in W2, you won't be able to, if you are in just W2. Like example, I was working for an Amazon, and I know that a lot of people might be working on full-time W2. Are you able to deduct any of your expenses, generic expenses, like mobile, internet, or travel expenses, your car fuel expenses, or even computer, tools, supplies, monitor, desktop, or even Apple Watch, iPad? You need all these expenses to manage your property. You need to incur all these expenses. Like example, if I have a rental property, I need to ensure that every month I am in touch with my tenant. I need to ensure that I am looking for, I also need some equipment like computer, tools to look for more real estate properties. So these all are reasonable expenses as per IRS. So whenever you have a real estate property, you can claim mortgage interest, depreciation, and taxes, whatever taxes you pay, including your property taxes. Auto and travel expenses, computer, tools, supplies, HOA expenses, utilities and direct expenses, and outside labor. We always incur a lot of labor expenses, maybe for maintenance, or maybe if you're paying to any contractor for any maintenance. All these expenses are tax deductible. So with this will reduce your tax liability from your monthly payment. From your tax liability at the end of the year. And if we have multiple properties where you really need to have an office or administration, home office expenses also can be claimed. My recommendation is if you have more than one property, then go for home office expenses also, because you need a administrative office to manage your multiple properties. So all these expenses can be deducted only when you have a real estate properties. Otherwise, if you are on just on W2, none of these expenses can be deducted against your W2 when you're filing your tax return. Then some people come and tell me, Anil, I have a rental property and I am paying a lot of taxes after even claiming all these expenses and depreciation. So then I would like to talk about a concept called accelerated depreciation. If you have been paying a lot of taxes on your rental property income, definitely you should consider accelerated depreciation. In general, IRS says, if you are buying a residential property, you should depreciate the property. What is the depreciation? It is a non-cash expense. So the value of the property is depreciated over 27.5 years if it's a residential property. If it is a commercial property, the property is depreciated over 39 years. It is a by default the tax system will generate, will calculate. But if we can increase this depreciation, the net profit from your real estate rental income will go down. For what you can do is, you can go for cost segregation. What does this mean? What we are going to tell to IRS is, hey, if there are so many small parts in my asset. Like example, I have a property in Puyallup. This is one of the area near to Seattle. Or otherwise, I have a property in Seattle for easy understanding. The value of the property is $500,000. The property, for easy of calculations, I say $270,000, and so that every year I can depreciate $10,000 by default. But I will go and tell IRS now, why I have to depreciate this property for 27.5 years when the carpet in the house will not come for 27 years. My rooftop of the property won't come for 27.5 years. My garage door won't come for 27 years. There are so many utilities in my house, like electricity, like fridge, utensils, or dishwasher, or washing machine. So those things won't come for 27 years. So that I want to split my total asset value of $270,000 into multiple buckets, like 5 years, 7 years, 15 years, and 27 years. As per Tax Act, if any asset which is less than 20 years can be depreciated in the year 1. So you can depreciate the more value of more value, like instead of, in the given example, for a value of $270,000 worth of property, rather than depreciating $10,000, I can go for a cost segregation, and I may be able to depreciate $40,000-$50,000 as an expense for that year. So that your taxable income from this rental property can go down. So this you should consider when you are paying some taxes on your rental property income. And today what I'm talking is very basics. There may be if you are having a lot more properties, if you need a lot more tax planning, anything also, you can reach out to me. You can ask your questions in the chat box, or you can even see my contact details here. You can even ask me, you can send an email to me. We're very much happy to answer your questions. You can go for consultation and we can do it. So then, do you really need a legal entity This is a very common question I get whenever, because as I said, in our Indian community, we always invest in real estate. Whenever I'm buying a property or I already have a property, do I really need a real estate legal entity to buy a property? Let's see. Reason for legal entity. Because some people say that, hey, Anil, I need to set up an LLC for a real estate to buy a real estate property. First of all, are there any tax savings by having a real estate property? My answer is no savings. There are zero tax savings by having an LLC when you want to buy a property through an LLC. Anil, then what is the point in having an LLC then? If we have an LLC, as you know, there are compliances, but there are no tax savings, but there are, but LLC is for asset protection. Because if anyone wants to file a case on you, a personal legal claim, like example, you have a rental property, there is a fire accident in the property. The tenant, as you know, in America, anyone can file a case on anything. Your tenant will file a case on you saying that you have not been maintaining the property appropriately, so that there is an incident of fire accident at the home. So he wants to file a case on you. If he files a legal case on you, there may be a probability that it has an impact on your personal assets also. You may have some other assets which may also get impact because you don't have a liability protection, because there is no protection. But if you have an LLC, your liability is restricted to that LLC only. Like example, I have one property in Seattle in that LLC. So my liability is restricted only up to that LLC only. It will not, the person, the tenant cannot file a case on me on my personal name. He can only file a case on LLC name. And he can take it over whatever assets I have in LLC, but he cannot touch my personal asset. This is the one reason why we have LLC, why we recommend to have real estate properties under LLC. Otherwise, there are no tax advantages. You can claim every expense, whatever you do in general, in your tax return, whether with LLC or without LLC. So legal entity is not mandatory. If we have a legal entity, it will help you on protection. So then, what do I recommend? Come on, Anil. Yes, LLC is good. So how do I recommend? Because you already have an LLC now. So you already have rental property, but that LLC is on your name. So I'm sorry, the rental property is on your individual name. But now you might start thinking, hey, Anil, if something happens at the property, if I have a property, if I have a rental property on my personal name, how do I get a legal asset protection now? So my recommendation is as follows. You can transfer your property to LLC. So why LLC only? Can I start a C corporation? Can I start an S corporation to transfer to hold the property title? Answer is no. We strongly recommend you to not have a S corporation or C corporation to hold a property title. We recommend you to have a property under the name of LLC, and it is because it is a limited liability company. So your liability is limited, and it is a flow-through entity. What does it mean? You don't need to file a separate tax return. If it's a single member LLC, you don't need a separate tax return. It is only just one schedule, a Schedule E in your individual tax return. So it is a flow-through entity, whether you have a positive or negative. It will, from your rental property incomes, it will pass through it will go through your individual tax return, that is 1040. So we recommend you to go for an LLC, not corporation. If you are planning to buy a new property now, start an LLC, buy the property under the LLC name. Anil, I already have a property now. What should I do now? So I will answer that. So, and where to register? Anil, okay, right now I'm planning to buy a property. Where to register my entity now? Which state? Because if you go on Google search, what is the best legal entity? What is the best state to register an entity? There are so many answers. Delaware, Nevada, or there are so many entities, are so many Wyoming, and there are different state names are there. Do you really need to go and register in Delaware or Wyoming or Nevada or some other place? My recommendation from the tax perspective, okay, where do you want to register? Because you may be living in a state like Washington, where I am right now. So if you are living, do I need to go and register in some other state, or shall I register in my own state? So my answer for this question is, because this is a very common generic question I get at least hundreds of questions exclusive on this point every year. So my recommendation is, first, if you're really much worried about entity protection, liability protection and everything, or privacies and everything, my recommendation is talk to an attorney, not with an accountant, not with a CPA. If you're really thinking so much, hey, why do I need to register for my entity? Because my Google is saying like this, or my friend is saying like this. Go and talk to an attorney. What do I am not an attorney, but what do I recommend? My recommendation for as a tax guy is where the property is located. So don't go for, wherever the property is. So wherever there is a property, just register there. You don't need to go to some other state and register. Otherwise, where you are living. Like example, I am buying a property in Texas state. Do I should register a legal entity to hold the title either in the Texas state or in Washington state, not anywhere else. There are no major tax advantages, or there are no other major advantages when you are having couple of properties. If you're really making a very big, you have so many properties, then I strongly recommend you to go and talk to an attorney, not with an accountant or a CPA. And so, Anil, now I am good. Now I am clear where do I need to register? Which type of entity? Because as I was saying earlier, LLC, partnership LLC, multi-member LLC, S corporation, C corporation. So either I recommend you to go for either single member LLC if you are holding the 100% shares and it is a pass-through entity, or go for partnership or multi-member LLC. So multi-member is me and my friend. If two members together buying a property, then go for multi-member LLC. This is what my recommendation to my community. Then, Anil, this is good now. Now we are clear. We need to have a property. Now what is to be done? Now how do I operate my LLC? Because I don't know how to manage my property or how to operate the LLC. So these are the steps. The first form and register an LLC. Then obtain an EIN, employer identification number. You can set up an entity either in online. There are so many service providers are there, or you can even reach out to me. We are also happy to set up an LLC for you as a service provider. But otherwise, you can even do on your own also. Go and look at your own state and go through the process. But my recommendation is go with a professional rather than doing it on your own, because I have been seeing a lot of small mistakes people are doing. Rather to correct that again we are spending money. It's only one time when you are buying a property of 500,000, 1 million, 2 million worth of property. It is absolutely okay to spend a couple of hundreds of dollars for a professional. And first then get obtain an employer identification. Then open a bank account. Then transfer the title to the LLC. If you're buying it now, yes, buy the property on the LLC name. If you already have a property, now you can transfer the title individual. Like example, I have a property in Seattle. I want to transfer the title to LLC. Now there is a process which I'm going to talk about next slide. There is a way you can just transfer your property title from personal name to LLC. There is no tax impact when you transfer the title to your LLC, which is owned by 100% by you. It's just you're keeping transferring the title from one pocket to other pocket. So you don't need to worry. It's a simple process. And once you transfer the title, update any contracts to LLC name. If you already have a tenant, please update your tenant agreement. At the end of the law, many times on the tenant, update the rental agreement on the LLC name. Update your utilities, all the names has to be transferred to LLC name because the title is owned by LLC now. And rental to be deposited in your LLC bank account. Please don't, when you have an LLC, when the LLC is owning the property, the rental income also should be deposited in the LLC name, and also all expenses also to be paid from the LLC. And if you are getting any 1099s or if you are giving any 1099s, everything has to be done through LLC only, not on your individual name. And at the end of the year, don't forget to file tax returns for your LLC. If there are operations, it is a mandatory that you have to file tax return for your LLC. I mean, if it's a single member LLC, that is a part of your 1040 individual tax return. If it's a partnership LLC, you have to file a separate tax return. So these are the steps you have to, this is how you need to operate your account. Why I'm going through all these steps here? When we file tax returns, we are facing one big problem. Title is on individual name, but the person has an LLC. If they are getting the rental income on the LLC and they need to file tax return on LLC, but the LLC cannot claim depreciation because the title is not owned by LLC. Technically, there is a problem. So to correct that problem, it's a process, very simple, easy process. You need to transfer your title from your personal name to your LLC name. So this is one simple step, you should do it and update all your agreements. Then, Anil, what should I do to transfer my title to LLC? This sounds really good. Come on, how do I do? So this is what the process you do. First of all, contact your lender. If it is an already existing property, please go and check with your lender. Can I transfer the property to LLC? Most of the cases, a lender says that, no, you cannot transfer. Then you need to renegotiate with him. Okay, how? Because when you transfer the title to LLC, the LLC doesn't have a credit history. And they are worried how you will escape from that loan guarantee. So what you can offer is, you will personally be liable for any property for the loan amount, even after transferring the title to LLC. If you can give that guarantee, then lender will be able to transfer the title, will be able to approve your request to title for the title transfer to the LLC. And lender may ask for refinancing or lender may disagree. If it's the lender is disagree, my recommendation is don't do anything. Hold on for now. When now you need to refinance it, maybe later find a lender once the interest rates go down. Find a lender who can give you the loan on LLC name with a personal guarantee at individual level. So once your asset protection is activated only when the title is owned by LLC. Otherwise, it won't work. Then okay, once the lender approves, then what happens? Then there is a very simple process. It's called quit claim deed. What does that mean? You are it's a simple documentation. You can Google search. Wherever you are in America, doesn't matter. You can Google search. You need to go to the county recorder's office, and there is a simple process documentation. You need to do it. You need to fill it, and notary may require, and you need to go to the county's recorder office and submit the form. They will transfer the title from your personal name to the LLC. If you are not able to do it, there are title companies are there. There are very easily. It's very easy to find out. Because in every area, state specific, there may be many title owners are there. Google search, contact them and get it done. On average, they charge $200 to $300 to do this work. Can I do it on your own? Answer is yes, you can do it on your own also. But I will leave it to you. But you need to look for quit claim deed. This is what the process you should follow. Then, so Anil, then my next question, Anil, as recession is coming up, is it really worth to buy a property now? My answer is, I am not explaining, I'm not commenting on whether recession will come or not. As you are watching the market, I am also just like you, I am also watching the market, nothing else. So recession may come, may not come, but build your real estate in such a way it is a recession proof. What does it mean? So cash flow. Focus on cash flow. If you are getting a property where you can actually have a cash flow every month from that property, after monthly paying EMIs and everything, definitely you should consider buying a property, because once you have a positive cash flow, it doesn't matter for you whether the property, the prices go down or not. But anyway, in the next, if you are confident that you want to hold the property for at least 5 years, and if you are confident that you get a positive cash flow, it is okay to bite the bullet, because no one can time the market. Recession may come up, recession may not come up. Interest rates will come down for sure. And if you have cash, if you find a good deal, yes, prices may go down. I am not a real estate agent. I cannot know, but my recommendation is, yes, if you get a very good deals, or if you get a positive cash flow from the property, and if you have the cash to buy, yes, I have been saying many people are grabbing a lot of great deals during the when the market is down. And also cash reserves are vital. When you're buying the property, please note that you need to have some cash reserves also, because right now the interest rates are high. And when the interest rates are high, and we are expecting interest rates will continue to grow up for maybe for the next 1-2 years, or maybe for 1 year. If that is the case, you should have an extra cash in you with you to pay your monthly EMIs. But for sure, interest rates will go down in the next 1-2 years. Then don't over leverage. Buying a property with a leveraging is, yes, recommended, but don't over leverage. And that means don't buy the property for our investment purpose by investing at 3% or 4%. Try to invest by 20% of the value of the property, so that monthly EMI will take care of, monthly rentals will take care of the EMI. But if you over leverage it, that means if you are taking over loan, if anything happens to the real estate market, you will be at the problem. And financing can disappear, and the right market matters a lot. The right market, the timing of the market is very important. If you find a good deals, go with it. If you're not finding a good deal, for now, recession may positive, more than 50% chances are there. Recession may come up considering the market scenarios right now. So then I would recommend you to hold it. If you have a very good positive cash flow, why do you worry? Just put the cash down, buy the property. Once the interest rates go down, refinance your property. Then the other tax benefits of rentals and passive income losses strategies. There are basically 4 major benefits when you have real estate property. Number 1, appreciation. As I was saying earlier, the property will continue to appreciate in the span of 5, 10, 20, 30 years. Even market may go down, but it will bounce back again. And you will continue to enjoy the appreciation on the 100% of the value, even though you invested only 20% of the value. Then mortgage reduction. So mortgage reduction is you are investing only 20%. 80% you get it as a loan. This loan, who will repay? You are not repaying, your tenant will repay. And you get a tax deductions, and you do also get a positive cash flow. This is a very major key advantages of having a real estate property. And my first question for today, I received even before I started the webinar is, Anil, how do I set it off my losses from the real estate with my W2 income? Sir, I don't remember your name. This is what your answer is. So there are 3 types of real estate investors. Basically, I'm talking about only rental properties. Okay, there are different types of real estates. Are there still real estate investments in the hotel industry, real estate investments in gas stations, where there is a substantial real estate properties are there, which are not covering it, but I'm covering about only real estate rental properties for now. Number 1, the first concept is passive investors. What does it mean? I am working for a company somewhere. I'm working on W2. I'm buying a property, and every month I get a passive income. I'm investing to generate a passive income. So anyone qualifies by default into this passive. Like example, if I'm buying a property, by default it is considered as a passive investor. That means I'm investing, I'm getting the money, I can claim some expenses against rental income only. If I'm getting any losses from this investment property, losses from the rental investment property, cannot be adjusted with your W2 income or active K1s from your business income. So if you are buying any rental property, by default, all losses from the real estate property because of depreciations or any reasons, that will not adjust with your W2 income. Because I have been saying many people are assuming that whatever the losses you are getting from the real estate properties will get adjust with the W2. Answer is no, it will not. Then active investors. Active investors are where you are taking an active decision making, like you are, like example, to whom I need to give the rent, or you if you have or any maintenance you have not given for property manager. You are taking an active decision, then it is called as an active investor. In the K1, if we are having an investments in the real estate property, in the K1 there are two small boxes are there. One, general partner and limited partner. Active investment is nothing but a general partner. They are actively working. So active partner or active investment. So if you are an active, you can net it off your losses from your property to the maximum of $25,000 with your W2. Only if you are an active investor. But the problem here is your income cannot exceed 150K. So 150K, 1 second, sorry. I think the K is missing. So 150K adjusted gross income. If your income is less than 150K, then you can adjust your losses from the real estate property up to $25,000. Then the third and most important game changer for a lot of people is real estate professionals. Real estate professional is a concept where you can adjust your W2 income with your real estate losses. How does this work? There are two-part tests you need to meet. You need to qualify. Number one, the first test, two conditions are there. Number one, you need to spend 750 hours doing real estate activities. If you are having one property, two properties, you may not eligible for this because it's very difficult to prove 750 hours you are working on real estate activities. The second and most important point is primary occupation is real estate. If you are working on W2, if you or your wife both are working on W2, you are not eligible for this. W2 means full-time. W2 is by default full-time. So your primary job is some employment, not the real estate. And the primary job definition here is the working hours in a week. So if I say that, hey, Anil, I'm spending my time in the weekend for the real estate, it is not qualified. You in a 40 hours a week, your 50% of more, if you're spending on the real estate, then it is considered the primary job. And this can be you or your spouse. Any of you can work on real estate activities. You need to demonstrate. If at all, if you are showing as an RE professional, it is an election. It is a bit complex process. If you're an expert, your tax accountants are not experts on this, please don't, they may mess it up. Please identify the people who can actually help you on the real estate professional status. Otherwise, they will mess up your tax return. It is a complex one. So if you are a real estate professional, and if you think that, and one of you, that is husband and wife, one of you should be having a real estate as a primary job. You need to meet these two conditions definitely. Then you need to materially participate. You should take decisions of the property, and you need to actively involve, and you should be a general partner for the property. And you are technically, if you don't have any property managers, then I strongly say that you are considered as a material participation. If we have a property managers for your property, it's a bit difficult to prove, but there are ways how you can prove, but still you need to continue to do a lot of work. If you are having a property which is a triple net, where you are not involved at all, then it is difficult to prove that you are materially participating. If you meet all these three conditions, if you qualify, all rental losses are deductible with your WT income or K1. This is a golden formula. This is a golden mine. If you meet all these conditions, or if you have any questions, reach out to me offline. I'm happy to guide. But this is a complex. It is not as easy as I see, because there are some material. There are 7 tests we need to go through that. At least you need to meet 1 test. So it's a bit more technical. If I go through, maybe I will cover this in the next webinar when I talk about advanced level. But for now, this is how it is. And then what is the other way? There is another way which because I was talking with I'm planning to have one more webinar on exclusive for the real estate investments in with an active negative K1s. Okay, so that's the reason why I'm not covering it up. But example, if you are investing in a hotel industry, or if you are investing maybe in a gas stations, they have a very big real estate, and all those property, whatever the losses they get from the real estate property, that is by default considered as an active. I mean, like example, if I'm investing in a hotel, maybe you see we have a lot of hotels. If I'm investing in a hotel industry, and if I get a negative K1 from that, which is an active, that can directly adjust with my WT income. So there are different ways. I'm not going in detail, but if you have any questions on that, or if you want to talk about that, reach out to me. I can connect with a lot of investors. Many of my clients have a lot of investments in the real estates and real estate projects. If you are not able to manage the real estate properties, there are so many people who manages, or there are so many apartments are there. You need to identify a trustable developer or real estate who can manage your properties, or who can manage your funds, or who can manage very big real estate properties. You can just invest. You can be an investor there, and you may meet these conditions. You can reach out to me. I'm happy to connect with them so that you can start investing with them, and you can directly work with them. Then capital gain. The other next question which I get is, because recently all our real estate properties got appreciated, and what are the tax planning strategies I have to reduce my capital gain taxes? The first and most important is, first you need to understand what is a capital gain. Whenever you're selling an asset, based on how many months you're holding the property, we will decide whether it is a short term or it's a long term. If you're holding the property for less than 12 months and selling it, it is considered as a short term losses or short term gains. And if you're holding the property for more than 12 months, it is a long term. And what is the tax rate? For the short term gain, the tax rate is nothing but your regular standard rate. It can be 24, it can be 22, it can be 32, it can be 37, 35, based on whatever income level you are. That is the short term. If it is the long term, the tax rates are 0 to 20% based on your income level. So we always recommend, one of the most important point is, whenever you are selling the property, ensure that it can be even your stock market or your real estate property. Ensure that you are holding for at least 12 months to save good taxes. Otherwise, you may be ending up with higher tax bracket rather than smaller tax bracket. So this is what the basic capital gains. Then what is the tax rate? So this is the snapshot of what level you are. Like example, when you are filing a married filing jointly, your income level will decide what tax rate you are. If it is a short term, if it is a long term. So this one snapshot will help you really to understand what income level you are and what tax rate it could be, either long term or it is a short term. Then the other important thing you need to know is capital gains is, if you are selling your primary home, for the first $500,000, you don't need to pay any taxes at all. Like when you may be upgrading to a new house, or you may be changing one place to other place, you are relocating, and if you are selling your primary home, and if you lived there for at least 2 out of the last 5 years, then you are eligible for this. But if you're renting out the property for some period, it will go down proportionately. I am not covering that topic here, considering we don't have time. We are already late. So, but if you live the property, if you lived in that primary home for at least 2 years, in the last 5 years, for the first $500,000, you may be eligible for the tax exemption. You don't need to pay taxes at all. Then if you are selling any of your real estate investment property, you can go and reinvest the entire sale proceeds to buy a like kind of property. Then you are deferring your capital gain taxes. This is called 1031 exchange. So what does this mean is, in general, if you're selling the property, you are directly taking the money. When you're selling the property, you are paying taxes at regular rates. But if you are going for a 1031 exchange, you need to buy one more real estate property, similar kind of property. By reinvesting the entire sale proceeds, you should not touch the money. You should open an escrow account. You need to work with a 1031 exchange expert. Then you need to reinvest the property to buy some other property. And when you need to buy the property, you need to buy the property within 180 days. Within 45 days, you need to identify the property. Within 180 days, you need to close the property. Then you are deferring your capital gain taxes to the next property. You are not paying any capital gain taxes now. This is one of the greatest tax planning tool for real estate investment capital gains. Then opportunity zone funds. So opportunity zone funds is like one more opportunity. You already got the property. You already got the money when you sold the property, but now you want to save some taxes. Then there are an opportunity where you can invest these capital gains, not the entire sale process, only capital gain amount. You can invest in a opportunity zone funds or opportunity zone property. What does this mean? American government identified few locations in America where there is a development required. Those places are called opportunity zone funds, opportunity zone area. So if you are buying a property there, or buying a land, or buying a property, and if you are helping for the future economic growth in that area, then you get some tax advantages. What advantages you get is, you are deferring your capital gain taxes till 2027. Till 2027, you are deferring. And if you are holding the investment, the new investment, for at least 10 years, then if you are making any capital gains on the sale of that new property, you don't need to pay any taxes on the new property also. So you are not escaping from the taxes for now, but you are deferring the capital gains. There are two levels here. You are deferring your capital gain taxes till 2027, and if you are holding the property for 10 years, you are exempted from paying any taxes. You are for the sale of second property. So this is also an opportunity zone. There are so many opportunity zone fund investments are there. If you need any help, I'm happy to guide you, happy to connect with the right people who can help you. Just send an email to me. I'm happy to connect with the right people. Then, Anil, there are so many advantages. How can I help? I can help you in designing a tax plan if you have more real estate properties. If you are having one or two properties, if you are looking for good investors or good builders or hotel owners or real estate owners where you can go and invest, send an email to me. I will connect with some trustable people whom I know or who are my clients. I can connect with them. That is one way. And if you are having more real estate properties, contact me. I can design a proactive tax planning for you where you should be able to save a lot more in taxes, and how to use your real estate as a tool to reduce your tax liability. I'm happy to help you on saving taxes. I can design a plan for you. Send an email to me and I can help you there. And many people think, hey, Anil, my accountant, my CPA has not been guiding all this. How do I change? You can change your accountant or CPA at any time in the year also. Even though they filed your extension, still we can help you to file your 2022 tax returns. Reach out to me. You can scan, you can sign up for your new, you can reach out to me. We're happy to help you on filing your tax returns. And also, when you file tax returns, we won't be able to guide you immediately, but after filing a tax return, we can help you on designing a plan for 2023. And if you are looking for more newsletters, you can sign up for the newsletters. You can see it in every slide in the corner. I have a barcode. You can sign up for the newsletters. And thank you very much for this opportunity. And I'm opening up for the Q&A. And these are my contact details. For any newsletters, you can sign up. I share a lot of information all the time. So you can also sign up, and we'll be happy to share my knowledge with the community. And my contact details are there. You can see my contact details. I also shared in the contact also, in the chat box also. And I'm happy to take up the questions. Thank you very much. Thanks for this opportunity.
And Anil Garu, that's a wonderful session, Anil Garu, knowledgeable, and definitely people will wait for your second session. I'm very sure. And definitely, after this session, I'll come up for the next taking the next session slots. And I see that there is a huge flow of Q&A in the chat, and my team is working to consolidate them because there is a repetition. Madhu, you can go ahead with the questions which came on the chat, and we will open the session for any others whom we feel that questions are unanswered.
Sure.
Madhu, you can take it ahead.
Okay, sure. Thank you, Anil, for an informative session. So here are the questions. So one of the participants asks, he's a first-time home buyer, and since you started the session using real estate as an investment, some rental properties and all that, so they're asking, with the high interest rates now, is it a good time to start investment property? So these are the first-time home buyers.
Okay, I covered that point also. Just be very cautious about the market. Market may go down, no one can guess. But if you're thinking about positive cash flow from the property, I think you should start doing something somewhere. Always, if you wait for, then as we have seen how the property prices are going up, and at any time, if we get a very positive news, if any positive news comes up, all of a sudden our prices will our real estate prices will start shooting up. So no one can time the market, but interest rates are high. If you have a cash and if you are getting a good deal, definitely my recommendation is go and buy, because you can refinance it later, or you can refinance it once your property rates will go down. If you're not getting a good deals, my recommendation is hold on. Don't, if you're buying a first property, second property, just be very cautious. I am not a real estate agent. I'm only talking with my tax perspective. You might need to talk to your real estate agent, do your own research. So recession may come up, may not come up. No one can guarantee.
So now other question today. So my wife is a homemaker. Can I claim REP status for her and claim loss on a home rental as a business loss on Section C?
Answer is yes, you can, but you need to meet all those conditions. 750 hours, Act 2 participation, materiality. There are multiple tests are there. If you want to discuss more on one-on-one, I'm happy to. Don't just do it blindly. If you are using a TurboTax or if you are using a local accountant, please don't go for the real estate professional. This is a complex strategy. I took a dare to explain it here. If anyone implement it wrong, please don't blame me. Okay, it's a complex. It's a great strategy, but it's a complex.
Got it, Anil. Thanks for the caution. So there's one other question. There are multiple questions related to the tax implications on the depreciation that you mentioned. So there is 5-year, 7-year, 10-year depreciation on the property that you have mentioned, right? So there are multiple questions. I've consolidated them. After depreciating a property, what are the tax implications? And after I have utilized all the 100% depreciation that is allowed on a property, if I sell the property, will I end up paying 100% as a profit?
Okay, so depreciation is like, yes, it's a very good question. Every year you have to claim a depreciation. Some people opt to not claim, but it is not allowed. Whether you claim in the tax return or not, IRS says that so many years you hold the property, calculate the depreciation accordingly. So there is no escape for not claiming depreciation. Step number 1. Step number 2. Yes, when you sell the property, do I need to reverse the depreciation? The answer is yes. This is called depreciation recapture. So when you sell the property, you need to calculate capital gain taxes and everything. But depreciation tax rate, the depreciation recapture tax rate is to the maximum of 25%. That is, whatever tax rate you are enjoying doesn't matter. Whenever you sell the property, maybe 10 years, 20 years, 30 years, whenever you sell the property, whatever depreciation you already claimed, you need to reverse it and you need to pay 25% taxes on that. But if you're going for 1031 exchange, you don't need to worry. You are not paying any taxes. You are reinvesting somewhere else. So my always recommendation is go for 1031 exchange to save taxes rather than paying taxes. So if you're going for 1031 exchange, depreciation recapture also is there, but you don't need to break your head. So it will go to the new property. So 25% is what the depreciation recapture rate. And you say that, Anil, when I need to repay the depreciation, what is the point in claiming it? You don't have an option. You have to claim. Simple.
Thank you, Anil. That's very helpful. So you spoke about LLC, adding properties into LLC. So there are multiple questions there. So the first question is, can H-1B visa holders open an LLC? The continuation question is, if not, what are the other alternatives? There's one more question. So if I'm holding multiple properties, should I put one property under each LLC, or can I club all the properties into one LLC?
Very good question. First of all, H-1B holders are not supposed to work actively anywhere. It's an active income. So they should not have an active income. But if you remember, by default, investing in the real estate rental property is considered as a passive income. So H-1B holders can invest money in the real estate, number one. Can they open an LLC? Answer is yes, as they can invest in LLC. Holding an LLC is nothing but investment. Just like you are investing in the maybe in the stock market, like that you are investing in an LLC. It is a passive. You can hold the property in LLC even though you are on H-1B. And number three, how many properties I can fit into LLC? It depends on person to person what level of risk you are ready to take. My standard recommendation after reviewing so many personal situations, one LLC can hold $500,000 of equity. That means if I'm buying a property of $500,000, like example, I gave one example of if I'm buying a property in Seattle area, a $500,000 of condo, I invested 20%, which is $100,000. So the equity in the property is $100,000. Or what are the equity have? To the maximum, so 5 properties I can have it in one LLC because up to $500,000. So in answering to your question, up to $500,000 of equity, how many properties doesn't matter, you can have it. If you want to take more risk, it's okay. What does that mean is, if something happens to in one property, it may have an impact on other properties also. But how many LLCs you can create? So my recommendation, $500,000 equity in under one LLC.
Got it, Anil. So there is another question. What if I have an umbrella insurance? Do you still recommend going for an LLC? And let's say I have a 1 million or a 2 million personal liability insurance versus an LLC. Like, what are the property tax implications? Because for a few states, LLC has higher tax rates compared to personal. What do you recommend going for if we already have an umbrella insurance covering 1 million or 2 million versus having an LLC?
Yeah. So my recommendation here is umbrella insurance is good, but still it is worth to spend $300 to set up an LLC and have it. What is wrong? When you are buying a $500,000 worth of property, it is absolutely okay to spend $300 and get an extra protection. So, and it will when umbrella insurance is like, if nothing can covers, then umbrella insurance will come into the picture. So if we have a specific property, specific LLCs, it give you more confidence. If I am in your position, I will go and invest $300 extra to have an LLC. That's it. Because of having an LLC, there is no additional cost. You don't need to file a separate tax return. If it is a single member LLC, I can hold multiple properties under one LLC. My investment is only $300. So, but it gives a lot more confidence. But every year for annual maintenance charges, $20, $30 I have to pay to the state. That's the only thing which I'm doing it. But otherwise I am good. So my recommendation is still go for LLC for an extra liability protection. And the second question is, some states have extra taxes. I have not heard property taxes will go up if it is an LLC. It doesn't matter. because if it's a single member LLC, is nothing but a disregarded LLC. There is no differences. The tax rates are high. It's not about property taxes. Interest rates are high for LLC. That's what I agree. But property taxes won't be high by having the annual property rate or property taxes won't go up just by having an LLC. So, I may be wrong, but with my limited knowledge of I have not had, at least in my experience, in my experience of talking with my clients, where I have clients in more than 30 states. I have not heard which state is charging extra property taxes because they're having an LLC. Go ahead, sir.
Very helpful. I mean, the ROA returns on the rate, for $300 you get great returns. So
yes,
absolutely agree with you. So there is, considering the time, I'm taking 2 more questions. If I already have a trust and my property is covered under the trust, do you still recommend going for an LLC? I think the answer will be yes, compared to that 300 investment.
Yes. Under trust also can have an LLC. Yes.
Okay. If I have a property in one LLC in one state, which has state taxes, but I opened another LLC in another state, which has no state taxes, what do you recommend? Do you recommend me transferring the property from the state which has high taxes to the LLC in a state which doesn't have taxes?
Okay. So you need to file state tax return in the where you're generating the income. Doesn't matter where the LLC is there. If you're generating income from the state, you have to file a state tax return. So it won't help you.
Got it, Anil. Thank you. Thank you so much for patiently answering all the questions. Keshava, you can take it over.
Yeah, Madhu, thanks for consolidating those questions. While it is to reduce the number of Q&A, Madhu was trying hard to consolidate. There could be some few specific questions like which audience would like to come up. So Madhu, you may unmute the line so that they can ask any question. If there is a question, they can ask directly to Anil. So we are, please note that we are time bound here. And so time is limited. So any unanswered question will definitely, Anil would like to address this offline. So anybody has a question, please go ahead.
If there are any unanswered questions, feel free to send an email to us. And if it's a simple question, we are happy to answer. If it's a complex, we are also in the service industry. Our time is what our money. We offer a paid consultation. So you all are working in IT profession. I am also, this is my full-time job. If I'm spending time, it's a paid consultation.
So I could see most of them, you answered it, covered it very well, Anil Garu. So hope to see, like, if somebody has a questions, yes. Then if it is, there is no questions, then I think it's a wonderful session. So we have a few more minutes. If somebody want to ask any question, yeah, please.
So one question, Anil Garu, this is Manohar. When you say property, all these, whatever we learned, how it differs from residential versus commercial?
So, I mean, except the depreciation from the tax perspective, everything is the same. So you can claim all the expenses, whether it's residential or depreciation or commercial. But definitely there are different, complete different topic that is, but still both are good. But my favorite is always multi apartments or block houses, group houses, 3 houses, 5 houses. It is so good, very good ROI. If you have money, don't, instead of buying one property, go for look for group houses. Or if you want to partner with your friends, partner up and go for group houses. Group houses concept, the ROI is much higher rather than anything else. And also the multi-apartment communities, 10 apartments, 20 apartments, 50 apartments, 100 apartments, their ROIs, the valuations or depreciations, they're really good.
Thank you very much.
And Swami, you are unmuted.
Yeah.
You can go ahead, please.
Yeah, thanks for the presentation. I have a question around QOZs. You mentioned about moving the gains from other places to QOZs. Is it applicable also for the capital gains from the stocks that can also be moved to the QOZs?
Yes,
oh.
Yes.
And you said it has to be held for 10 years.
Okay, so you have to invest within 6 months, number one. Then once you invest, then your capital gain tax payment will differ till 2027. That is the one advantage. The second advantage, the wherever you're investing, if you hold the property for 10 years, whatever capital gain you make on that property, if you're selling it after 10 years, that's completely 100% tax free.
Okay. So by deferring to 5 years or 6 years, and in between, if there are losses, can they be again used against? No. Okay.
No, the losses, what happens? Okay, yeah. These losses, if it's rolled over for the future, in the year 2027, right now I'm in 2027. Now I have a capital gain tax liability now, which got deferred for last 5 years. Now, if I have any carryover losses, that can adjust.
Okay. Or in that year, if there are losses, that can be adjusted.
Yes, that can adjust. Yes. Yeah,
okay.
But doesn't matter about 27, you have to pay taxes.
Okay. And there is no tax rate also can change, or tax rate also will stay the same as now?
No. At that time, whatever the tax rate you have to pay.
Oh, okay. So
that will be considered as a capital gain for that year. That's it.
For that year. Okay. So if we expect our tax rate will go up, then it's not good to depreciate.
Yes.
Okay.
All right.
Thanks for the clarification.
No problem, sir. Yeah.
Hi, Anil. This is Vinod Kardas.
Hi, Vinod. Yes, tell me.
Hi. So let's say I have a home, first home. So I bought it in a primary residence. And after an year, I bought another house as a primary residence again. Okay. So can I rent the second primary residence as an investment?
Vinod, if you don't mind, can you repeat it? A slightly different question. Can you repeat from the beginning? I'm sorry.
Okay. So let's say I have a primary property, which I bought like a year back.
Okay.
And technically, after 1 year, I can buy another primary residence, right? So let's say if I buy another primary residence, which is somewhere around like more than 50 miles from the current primary residence. So can I give that primary residence as a rental property?
Answer is yes. See, for the loan purpose, your comment of 1 year waiting, everything is for the loan perspective. From the giving a rental, you can give it. No one, once you get the loan, no one even worries. So you can give it for rent. Yeah.
Okay. So let's say, can I give it to property management, and technically, is it official to give it as rental?
Yes, of course it is. Of course you can give it for rental. I mean, I don't know your lender terms, but no lender doesn't even care. I mean, I am in my home, primary home. Lender never even bothers. As long as you pay monthly EMI, no one cares. Yeah, but you can give it. Yeah, from the tax perspective, there is no restrictions. You can give it.
So Madhu, here there are a couple of people who raised their hands and they have questions. Can you please unmute them?
I gave permission to unmute everyone, so everyone should be able to unmute.
Now it's open to all.
Yeah.
Yeah, sure. Go by people who raised hands. Next question is from Ajay Mandodi.
I think Madhu has the permission to unmute.
Yeah, I'm already giving the permission.
Hi, Anil. My name is Ajay. Actually, for this LLC, do we need to have different LLC for different purposes, like this for real estate, one LLC, and for other business, other LLC, or general?
Of course, yes. Don't mix up this real estate with anything else.
Okay.
Thank you.
Hello, Anil.
Thank you.
So you suggested to create an LLC for each rental property, right? But states like California has state taxes applied every year. We have to pay that. So do you still have any tax advantage creating an LLC for any rental property? After paying the state taxes.
In California, my answer is maybe you need to think the cost benefit analysis you have to do. So then do it. So California, most of the people don't have the LLC because of this $800 payment every year they have to do.
Yes. So there are no added advantages, right, for creating an LLC for a rental property or something?
For California state, because out of 50 states, California is the exception. So whatever I spoke today, everything has an exception. So California is an exception.
Okay, thank you.
Next, Shyam.
Hi, Anil. Can you please hold a session for advanced real estate taxation planning? I'm interested to learn more about real estate professional, how to claim Airbnb depreciation losses on W2 income. So like what you mentioned, we have a lot of questions on
Yes.
such matters.
Correct.
So any advanced session where you can teach how to do cost segregation study, how to hire an engineer to do cost seg, those things will be very helpful.
Yeah, definitely, Sham. I'm happy to do it. That is the reason why I didn't discuss, because people, as you know, it's a complex. People get
Yes,
confused.
yes.
So,
Yes, but
and
a lot of us will be interested if you can
yeah, oh,
schedule something
definitely.
like
There's
that.
a lot
We can,
of learning
Yeah.
can be done there. Yes.
Thank
yeah,
you, Shyam.
we can say $40,000-$50,000 every year, from W2 by doing that and reuse that money to buy another property, like you said in the
Definitely.
beginning.
Definitely. Yep. Maybe Casho has to coordinate with me for the second one, but I already said yes, he will. But definitely, yes, I am open. I have my knowledge. Even you wake me up in the midnight of day, I will go and talk. I can explain.
Thanks, Anil.
Vani garu?
Yes, sir.
Vani garu, do you have any question?
Oh, did I unmute myself? I'm so sorry.
Yeah.
No. I was
No
just
problem.
listening.
Next
So,
question is from
maybe
Prasad.
here, see, we are time bound here. Maybe 2 more questions, and
Sure.
we will close this session. So
Prasad?
anybody has any questions? Please go ahead.
Hi, Anil Garu. Thank you for this wonderful session. This is Prasad. I actually have reached out once. I know your team is wonderful. So is there a possibility I can reach out directly over to you for a 1:1? Because there is a lot of hops in order to reach you. So I was wondering, is there an easy access to you so that I can set up one session? Paid is fine too, but I wanted to have a really, like, you are very informative. You have a vast knowledge of everything. So I just want to set up something. So is there a possibility to reach out to you directly?
Good question, Prasad Garu. So as you have seen, we have clients in 30 states, and and my time is very valuable. So that what we do is, I have multiple CPAs in my company, and we offer paid consultation. Definitely, you can have call with them, and of course, I am also available. I can also do it. You can just send an email to me, email to this address, and ask for a paid consultation. You will get my paid link, and you can set up a meeting and you can talk. But generally, my team is also trained so well, and licensed CPAs are there, and they will be talking with you on one-on-one. So I will ensure that whatever knowledge I have, I'm training my team so that my dependency on me will go down by having a great team members. Because I work for Amazon, Microsoft, Amazon, Starbucks, and PwC. I was I'm very good at training. So, yes. But you can send an email. I can send the link. Yeah. Next question. Yeah. Thank you.
So I think Anil Garu addressed all the questions, and thanks for your time, Anil Garu. And Manohar Garu, just would like to have a few words here before we close this session. Manohar?
Yeah, sure. Thanks, Keshav. First of all, thank you, Anil Garu. You have been a great supporter to TTA, and your valuable time you have been spending on weekends to educate our community members on various topics. I mean, your session is very popular. Thank you very much for your time. And yeah, so Anil Garu's contacts you can see on the screen, and it's there on the chart as well. So TTA has been conducting these sessions every week on various topics, and this has been possible with the support of our leadership team and advisory council and our president Vamshi Reddy Garu. You can be part of this great cause. These are all free sessions, and we are bringing great speakers to educate you all. You can be part of this great cause by taking a TTA membership. The membership link will be posted in the chart, and take a membership and support us. Thank you very much, and thank you, Keshav, Madhu.
Thank you, Manohar, for your nice words. Okay, and I would like to thank you, the leadership, for hosting this wonderful session, and that is a TTA, would like to extend our sincere gratitude to Anil Garu for taking time out of your busy day to schedule this and join this webinar. And your expertise and insights on these tax strategies for real estate investors topic for today is truly enlightening, and I'm sure the audience would definitely wait to see your next sessions. And your contribution to our webinar was highly appreciated, Anil Garu. and your passion and dedication to your work was evident in this session, and the way you shared your knowledge and experience was grateful. And thanks for your willingness to extend your support to our community members and having them addressing all their questions. And once again, thank you so much. Thank you for your time and efforts. Thank you.
Thank you. Thank you very much. Thanks to TTA. Thanks to Keshav, Manohar, Madhu for coordinating, and Vamshi. So thank you very much, and looking forward for the one more session with the TTS soon. Thank you. Thank you very
Sure.
much.
Thank you.
Anil, thank you very much. Keshav, Manohar, and Madhu. Good job, Seattle team.